Good morning, everybody. It's Tuesday, August 13th, and this is the AgYield War Room. I'm Dan Dempsey, and I'll be moderating today's session. As always, if you've got any questions or comments, please feel free to drop us a line in the chat area, and we'll be sure to get to it during the show. Overnight markets here, December corn down a penny and a half at $4 even. November soybeans were down 14 3/4 at $9.71 1/4, and December Chicago wheat was up a half at $5.60 1/4. This morning, the USDA had some export sales announcements. 132,000 soybeans to China for 24, 137,160 corn to Mexico for 24. CONAB also out this morning, 115.65 for total corn and 147 for beans. In the outside markets, producer price index this morning was up 0.1% last month, which was slightly better than the estimates that they were looking for. Stock market currently up about 75 in the Dow. Yesterday after the close, we had crop conditions. Corn at 67% good to excellent was unchanged from the previous week and above the 5-year average of 61%. Soybeans, 68% good to excellent, also unchanged, and that's above the 5-year average of 60%. Winter wheat came back 93% harvested. That was versus 88% the previous week. And spring wheat conditions dropped a couple of points in the good to excellent category, 72% versus 74% from the week prior. So with that, good morning, guys. Justin, we've had some time to digest yesterday's report. We've traded overnight, obviously. So maybe just a few thoughts now that you've had a little time to chew on it, and then we can throw it around the room.
Yeah, thanks, Dan. I think markets are kind of saying it. Soybeans obviously pretty bearish. The most bearish part about soybeans is, at least with the numbers that they put out, is that they're increasing demand. 250 million bushels to get down to a 560 carryout. So, the government tries to write down a number that, you can argue how competent they are, but they try to write down a number that we have to get to, right? So that the market's job is to get to a price that allows that kind of demand to take place. And, maybe we're starting to get there. We're getting daily sales. We got some more today. Like I talked about yesterday, kind of that $9 to $9.50 area was the last time we had a, super burdensome carryout. We're getting back to those levels of, call it, that 2015 through 2020, kind of bounced around that $9 to $9.50 area a lot. We saw a lot of demand as we got down to these levels back then. Obviously Brazil, has produced a monster crop. So they've taken, China specifically taken a lot of soybeans from them. So they've been able to use us as a last, origin of last buyer for soybeans. So, I don't know, Dan, I think, corn, they had to put down a 183 yield, which is a record by 6-7 bushels to get the carryout to barely go up. So, luckily we had looks like we're gonna have a record yield. Is it going to be a 183? Is it going to be a 185? Is it a 180? The corn balance sheet's kind of, I think, balanced enough to where you probably have to keep raising yield to really press prices much lower than here. We were talking right before the show, and that 380 to 420 area is kind of the least exciting area. Just the way crop insurance kicks in, and as far as opportunities. So at this point, it'd be better to go right to $3. For most producers, I think, because you'd pick up demand crazy and you'd have double or triple payments for most people. So I doubt the market really wants to go do that. The funds have been covering, kind of what I think 70,000 contracts now or so. The managed money has covered into farmer selling. So, I don't know. I think beans still has the most downside, but again, we're at 950. Mm-hmm. So, how far do you want to press beans? Maybe back down to 9, but I think it's going to be a tough road after that, personally.
Yeah, so a grower's going to ask Justin, what's a pricing scenario for 180? What's that market, in your opinion, look like at 180?
I think we're probably, I kind of look at at a 180, you're worried about next year's corn production, right? Because you're still going to have enough supply to get through the year. So maybe you're a 1.8 type carryout. But December 25 is well under cost of production. Fertilizer, nitrogen prices are higher than they were a year ago. I think there's going to be a fear of getting enough corn acres at this current price structure. So I kind of look at, maybe the spreads can even get wider, but the December 25 contract at 450, I think is just too cheap. 440. I think it's probably 30 cents higher than here, something like that. 480 area. I would think we start building in some risk of not getting enough corn acres. But right now obviously we're going into that harvest gut slot. So I think if we can get through that, I would think we build a decent premium going into the spring for new crop.
Yeah, I think it'll be interesting. I agree. I think these corn at $4 is in a tough spot, and I think that if you look at if you're looking at it, the balance sheet at 183, it's pretty reasonably priced for I wouldn't want to push it into the hole. We typically think in bear markets of the next month sliding down to where the other month went off. It's a pretty typical MO of how these markets work. But I think the SEP is still going to be, a little bit of an anchor here for a couple of weeks as we deal with the residual of what was left unfarmed from last year. So that may hold on these corn for a little bit, but I don't know why anyone would want to, at yesterday's numbers, to really punish corn into much lower prices. And I think it would be too good for a lot of different reasons. So
I saw somebody post, stocks to use ratio in corn, we're 2% below last year and we're $1 cheaper. So we're actually a little tighter than we were a year ago on the August report, and we're $1 lower in price. So, and then you look at, and I know Dustin's talked about this, in our letter and on the show, but if you look at the world without China, it's getting tighter and tighter in corn. It's one of the tightest years. So we're, China really throws off that global balance sheet a lot. And we've gotten away with it because Brazil's been able to export so much, but now we're competitive. We're competitive against Brazil and Ukraine as well in corn and beans. So you can keep pressing it lower. You can keep pressing it, in the short run, but I think we're getting to some real value areas here personally.
Dustin, anything to add to that?
No, I think that's all said really well. I always go back to just the, purchasing power of the dollar index and the fact that it's a buyer's market. End users are making quite a bit of money here, and it's not sustainable. So you get a washout like this. I think the last time it felt like this was 2020, where actually on this date in 2020, it couldn't have been more bearish, right? Like people thought the world was ending, and we were so far below cost production then. We were also rubbing up against farm bill payments, crop insurance payments, and everyone thought, market needed to keep going lower. And then it did a 180, and something that traded in the mid threes traded in the mid sevens within the same growing season. So I don't think that I expect a move like that. There's a lot of stars that align to get that type of a move, but just for the market to kind of, take stock in the fact that, hey, our future cost production is still a big question mark of how it's going to come down. Why wouldn't you be kind of building larger carryouts, right? If you're a large country end user, who knows, maybe China starts a purchasing program because the price has fallen way below cost production, and that doesn't look likely to change anytime soon. So I want to be open-minded, like Justin's saying. I don't see the reason for a turnaround right now, but I also don't see how it sustainably stays here either. So
very good. Anybody, anything else to add on the grain side here before we move over to livestock? Okay, Ryland, I noticed yesterday CME feeder cattle index turned sharply lower. I guess maybe a few thoughts there.
Yeah, I mean, last week's feeder summary show we were saw feeder prices just tank $10 to $15 lowers in some areas. So, I mean, it kind of just been following the action on the board. We've seen this recent liquidation, which has been kind of devastating, and since have bounced a little bit, but feeders were pretty weak yesterday. It just seems like overall there's a lot of concern that, you know, prices were maybe a little bit too high for too long, and we're seeing some of those all longs start to bail out of the market, maybe just get a refresh. The USDA didn't really offer too much as anything is really new as far as fundamentals here. I mean, I think just overall they raised production just slightly for 2024 and still have 2025 production down about 5%. I mean, there really wasn't that much standout on the cattle side, so it doesn't look like we changed it, but overall it just seems like you got the cash market kind of tanking here, and it may be a reflection of just where this corn price is. We've got corn that's just much cheaper than it was, you know, just 6 months ago. So a lot can change. And I think you got a little bit of a panic sell just in the auction markets as well, just kind of around the country, especially with seeing northern prices start to go lower here on the fat side. So we haven't seen any cash side yet. Any cash develop really to any significant degree at this point in the week. It's still pretty early, so that's probably going to be pushed off till Thursday, if not Friday. But right now, it just seems like the board's kind of stuck, just waiting for that. We got the discount here. Overall, the board may be right. The longs kind of ran away as fast as they could, and now things are starting to kind of stabilize a little bit. Beef prices are back up, so there may be some hopes that we can kind of limp out of here okay this week, but we'll see. Still a lot to trade. On the hog side of things, cutout was back up, which gave a little bit more confidence, and just kind of mixed trade yesterday. It looked like most of the buying was kind of in the front end. I think you still kind of had a little bit of the roll to finish up, so it looked like October was kind of really where the focus is, and open interest was up 3,400 contracts. So seems like we got a lot of that going on, maybe even a little bit further out into the December, just because it seems like that's probably, you know, you set up for a little bit more of a weather situation just from here. But overall, you know, cash trends lower, pork trends lower here come post after Labor Day. So I think everybody's just kind of waiting for some new information to trade. I mean, the WASD didn't have too much here, but all in all, they did reduce 2024 exports by 125 million pounds. So I think just overall, you know, the market may have priced some of that in before this, but that's not very good on the demand side of things. So we'll see if that changes next month. But overall, it seems like the export market is just kind of non-existent right now in the USDA's eyes.
Very good. Appreciate the update. We'll keep an eye on everything and be back with everybody tomorrow. We appreciate everybody tuning in every day. If you like the content as much as we enjoy bringing it to you, throw us a like and subscribe. Doesn't cost you anything. Keeps you up to speed on all things AgYield when we put out our premium contents. Keeps you posted on new things coming out along the lines for AgYield. So give us a like or subscribe. We certainly appreciate everybody tuning in on a daily basis there. We are streaming live every day at 8:15 Central Time, every day that the markets are open there on X, Facebook Live, and YouTube Live. So appreciate all the thoughts and comments here this morning, guys. It was a good conversation. Hope everybody has a great day, and we look forward to talking to you again tomorrow.